Dear students, in the previous video, I have explained you guys on preparing a purchase books. Okay, we have solved around 3, 4 problems in that particular video. In this video, I will concentrate on preparing sales book, purchase return, and sales return book. Okay, as you have, if you have understood the preparation of purchase book, this it is similar to the purchase book only that we will be preparing the sales book as well as purchase return and sales return. Okay, so let's begin with the problem. Here you can see from the transactions given below, prepare the sales book of RAM for July 2003. Like we have two rules when we are preparing purchase book. Okay, while preparing sales book also we have to follow the same rules that we are selling only the business goods. One thing. Okay, second thing is that only the credit transaction should be recorded in the sales book. Okay, first rule is that only the business goods sold, that transaction should be recorded in the sales book. Second rule is that only the credit sales transaction should be recorded in the sales book. So here it's we are recording the sales transactions in a sales book, which is again a furniture company here. How did I get to know this is a furniture company? Here I just gone through uh, the chairs, tables, chairs, almirah tables, old computer chairs like that. All this, I assume that this is a furniture company. Okay, so now we are preparing a sales book on 2003 July 5th. On 5th July 2003, what is the transaction here? Sold on credit to SS traders. Okay, when we are selling, the person who is purchasing from us is a customer, right? Who is a buyer. Buyer, that may be a company or an individual customer or anybody, that is a buyer. So we have sold to SS traders uh, 10 chairs, 250 rupees uh, per chair, and 10 tables, rupees 850 per table, and the discount is 10%. And the discount is 10%. Next, let's record that in the sales book. This is a format of your sales book. Ignore these lines, okay? Arrow marks stating to the lecture, that is not our concern here. We have to learn to prepare the sales book. So here, date column, particular column, outward invoice number, ledger folio, details, and amount total. The first transaction is on 2nd July 5th, 2023. Who is a buyer here? Buyer is our SS Traders and Company. These people, this company has purchased 10 chairs and 10 tables from us. Okay. 10 chairs, one chair is 250 rupees. The amount is 2,500 rupees. 10 tables, rupees 850 per chair, rupees 850. Amount is 8,500 rupees. So the total of this is 8,500 plus 2,500 is total is 11,000. Now we have given 10% discount to this SS traders, that we need to deduct 10% discount on this 11,000 is 1,100 rupees. So what we have sold to the SS traders also on that particular date is 9,900 rupees. Okay, 9,900 worth of goods we have sold to the SS traders. Next, so next transaction here says that on 8th July 2003, sold to Raja for cash. Like I have already said, if it is a cash transactions, we are not recording in the purchase or sales book. Okay, so though we have done a sales here, as we have received the cash amount, we are not recording this in the sales book. This should be recorded in a cash book. Okay. Next, on 20th, sold to Mohan and Company 5 almirah at rupees 2,200 each and 10 tables at rupees 850 each. So we have on 20th, Mohan and company, we have sold 5 almiras at 2,200 each. The amount is 11,000, and 10 tables at rupees 850 each. The amount is 8,500. Okay. The next transaction is on 23rd July 2003, sold on credit to Narayanan old computer for rupees 5,000. See here, we have sold the computer, that is fine. Okay, but it is mentioned here old computer is sold. That means the computer which we were using at our office is sold. This is a scrap. Okay, like old newspaper which we have at our home, we sell it in a scrap, right? That is a scrap. So this should not be recorded in the sales. This is not a business good sold. This is a scrap sales. Okay, because we had some asset in our company which was old now, which is old now, and we are not using it, and we have sold it at a scrap value. Okay, that is not recorded in a sales book. Next, sold to Kumaran for cash. Again, here it is for cash transaction which we are not recording in the sales book. So here the total of this two transaction is 9,900 plus 19,500. Total is 29,400 is the total of your sales book, which will be credited in the sales account. That should be credited in the sales account if we are preparing a sales account. Okay, that you can see here. When if we prepare the ledger accounts from this in the sales account, that should be the total of the 29,400 is recorded in the sales account. Here we are not preparing the ledger accounts. We are just preparing the purchase book, purchase return book, sales return book. Okay, so that is about the sales book. Let's learn the purchase return book here. There is an illustration 3 here. Enter the following transactions in the purchase return book of Hari and post them into the ledger. So we don't need to post that into a ledger. So here 2003 January 5th. Return goods to Anand 5 chairs at rupees 200 each, not in accordance with order. That means this is a reason why we have returned the goods. Purchase return happens when we have purchased the goods from somebody. That maybe in this transaction we had purchased the goods from Anand, but now because it is not in accordance with our order, means what we expected as per when we were giving an order to him, that 5 chairs are not good. Okay, that is why we are returning those 5 chairs back to him. So that transaction should be recorded in purchase return book. The purchase return book format, again, it will be like date particulars, but here it will be a debit note. Like I have already said, when we are doing a purchase return, we issue a debit note. Okay, when we are doing a sales return, when we issue a credit note. So here debit note, ledger folio, details, amount total, remarks if in case, like because when we are recording that transactions, why it has happened, that time we can prepare a remarks column and give that explanation, not in accordance with order like that. So here how we have recorded that first transaction on January 5th, whom we have returned back, purchase returns, right? Purchase return means that is again a supplier here. Supplier who had supplied goods to us, to whom we are returning the goods back, is a supplier. Okay, now that is Anand is a supplier for our business. To Anand, we are returning 5 chairs at rupees 200 each. 5 into 200 is equal to 1,000 rupees. Okay, next transaction says on 14th January 2003, return goods to Chandran, 4 chairs at rupees 200 each, 10 tables at rupees 350 each due to inferior quality. Means the quality is not good. That's why we are returning these goods. Okay, so here to whom we are returning? To Chandran. What we are returning? 4 chairs at rupees 200 each and 10 tables at rupees 350 each. 4 into 200 is equal to 800 rupees and 10 tables into 350 is equal to 3,500 rupees. The total of these two 3,500 plus 800 is 4,300 rupees. So the total of this purchase return book is 5,300 rupees. This 5,300 rupees should be recorded in the credit side of the purchase account in the ledger book. Okay, but here the total of purchase return book is 5,300. If we are recording a purchase return account, here you can see purchase return account, it is going to the credit side. Like in sales account, it goes to the credit side. Purchase return account also, it will go credited. Okay, purchase return book total is credited in the purchase return account. This is a ledger. This ledger accounts, purchase return account, Anand account or Chandran account, whatever we are preparing here, these are ledger accounts, but this is a journal book. That is purchase return book is a subdivision of journal book. Okay, so this is a purchase return book. Next, sales return. Okay, so here they have given illustration 4. Enter the following transactions in return inwards book. Return inwards means sales return. Return outwards means purchase return. Return inwards means we had sold the goods to someone and that person is giving us those goods back. So that is inward to us. So that becomes sales return book. Okay. In 2003 April, on 6th April 2003, here you can see the return by Shankar 30 shirts, each costing rupees 150 due to inferior quality. So here, who has returned us? Shankar is a buyer. Shankar is a buyer who purchased goods from us. Now he is returning 30 shirts of rupees 150 each. So Shankar name we are writing here, date April 6th, 30 shirts at rupees 150 each. The details is 4,500. The remarks here, the reason why he has returned due to inferior quality. Next, on 8th April 2003, Amar Tailors returned 10 Baba suits, each costing rupees 100 on account of being not in accordance with their order. What they expected, that we have not met. Okay, so Amar Tailors, that may be in terms of size, quantity, quality or anything. So not in accordance with their order. So on 8th, Amar Tailors has returned the goods. What? 10 Baba suits. Each suit is 100 rupees. 10 into 100 is 1000 rupees. The reason is written here in the remarks. Okay. On 21st, TN stores returned 12 salwar sets, each costing rupees 200, being not in accordance with their orders. On 21st, TN stores returned what? 12 salwar sets. Each set cost rupees 200, 12 into 200, 2,400 rupees. So the total of this 4,500, 4,500 plus 1,000 plus 2,400, the total is 7,900, right? So that 7,900 rupees should be recorded here. That is a total of your sales return book. That will be, if in case we are preparing the ledger, that will be debited in the sales return account. Okay, so that is about our purchase book, sales book, purchase return book, and sales return book. So in the next video, I will prepare a problem which is having a combination of transactions relating to purchase, sales, purchase return, and sales return. Okay,